right, well, thank you, Amy. It's a pleasure to be part of today's webinar in which we'll talk about budgeting. And this is the first of our nonprofit webinar series this year. So in this one, we'll walk you through several different budgeting scenarios, along with highlighting best practices for turning your budgets into meaningful and effective financial tools. So we also have a couple of webinars coming up soon. On April 20th, there will be one covering internal management. And then on May 19th, there's going to be another one that's going to be centered around the presentation of external financial statements. So, so if this one interests you, if those other two interest you, we hope to see you in those two as well. You might want to consider registering for those as well. And I looked over the list of attendees today, and I see we've got a large number of people here in the webinar. It looks like 203 attendees right now. So that's encouraging for us to see, and that number just keeps growing as people are joining. But if you have questions, please type those into the Q&A. There's a box there at the bottom for Q&A. We will try to answer those, perhaps either live, maybe at the end of the webinar. We're going to try to reserve about 15 minutes at the end of the webinar to answer your questions live. We also may just type a reply. So if you have a question there, just put those in, and we'll get to them one way or another. Anyway, I'm going to introduce our attendees, but depending on how hard your questions are here, I'll volunteer to answer all the easy ones, and I'll leave the really hard ones up to my two brilliant colleagues here, Beth Farley and Jackie Brooks. So I'm going to introduce the two of them. Beth Farley here at the top. She is a partner located in our Reno, Nevada office, and she is an experienced accountant who specializes in nonprofits, churches, governments, contractors, and small businesses. She works with her clients to make sure they understand their financials and develop tools that strengthen their business or organization. She prides herself in making sure her clients receive professional service and valuable information. And Beth has two teenage daughters, and she's currently teaching the oldest one how to budget. So this topic here is very timely for her. Right here in the middle, well, that's me. I'm in the Lehigh, Utah office, and I'm a national senior manager with our business outsourcing and strategy department. I specialize in helping clients implement technologies that automate and enhance their accounting systems, including expense management, accounts payable, workflow reporting, business intelligence, cash flow forecasting, and all those different aspects of small business and the technology that can enhance all of those. And last but certainly not least, we have Jackie Brooks. She's also in the business outsourcing and strategy department along with me. And she is in our Tulsa, Oklahoma office. She provides business leaders with accurate, timely, and easy to understand financial information so leaders can do what they do best, develop their business. So overall, Jackie is known among the team as someone who can take the time to understand clients' businesses, their drivers and their processes, and can really dig deep into what makes an organization tick. So like me, Jackie has three young and very active boys. Those boys certainly keep me very busy outside of work, and I'm sure that's true for Jackie as well. And she can attest to the fact that Nerf bullets to the eye can be very dangerous. Haven't had one yet, but I know one has my name on it.
He said it's clearly a budget. It's got a lot of numbers in it. So I do imagine that most non-accounting professionals and leaders sometimes feel this way. They sit down in a board or management meeting and they see this piece of paper and there's a whole lot of numbers on it, and they probably immediately just draw their eyes down to the bottom and see what color it is or just how big or small it is. And maybe it's actually true for some accounting personnel as well. Maybe they feel like it's just a thrown together document at the end of the year, and they've got to kind of move things around to make it look a certain way to please the board or other leadership personnel. But my goal today is to show you and explain to you that a budget can be so much more than that, more than a last minute thrown together financial document, copying and pasting prior year's data and manipulating it a bit. It really can be a blueprint to your strategy. So, which brings me to, whoops, Amy, I went too far. How do I go back?
Just hit the arrow key on your keyboard to go back.
Okay. Which brings me to the idea of strategy-based budgeting. So first, let's clear the air for a second and ask ourselves, do nonprofits budgets have to balance? And no, they do not. So instead of focusing your budgeting process on that myth, we should be asking ourselves some of these key questions listed here. So first question, what financial outcome does your organization want or need this year? For example, do we have debt we need to pay down or want to pay down? Do we need to invest in our infrastructure or specific programs? Or are we literally hanging by the skin of our teeth and just need to survive the upcoming year? So if it's paying down debt, part of your strategy here could be to increase reserves over time. So the results would be carrying a larger bottom line over several years instead of breaking even. If your financial goal is to invest in infrastructure or specific programs, it may be acceptable to have a deficit budget for the upcoming year in order to do that. And if you tend to just be scraping by financially, your financial outcome may just be to break even, try to break even at least. So your strategy would be to simply increase your revenues and to cut costs. Without, and this is key here, without sacrificing your programs. So there's a little bit of strategy there. So at the end of the day, your bottom line definitely will look different for each of those different outcome scenarios. So that's the financial side of it. Let's take a look at some of these non-financial questions you should be asking. Think about who your stakeholders are. Who is the population that you serve? Do you serve the homeless? Is it the rare disease community, hungry children, veterans? The list goes on. And then from there, ask yourself, what are your goals to serve them? Is it to reduce homelessness in a particular area by 5% next year, or feed 500 hungry children in the next month? Do you need to provide medical supplies to medically fragile children during the pandemic? So just kind of taking a look and seeing what exactly specifically are our goals for our patrons. And then once you've identified each goal, you can determine what it will take by asking what actions need to be taken to reach those goals. So be specific when brainstorming these actions, because the greater your understanding for what it will take will help you determine exactly what resources are needed to put your plans into action. And I imagine that most of this is already being done in your organization at probably a very high level, or maybe even in just within individual departments or committees. But my challenge for you is to take your action plans and then apply them to your budgets, to be intentional with your budgets in order for them to support that overall strategy that you have. So with that said, let's move on to the next steps in our process. And so once the who and the what and the how are answered, you're going to use those priorities that we came up with and begin allocating resources. So basically you're allocating resources from the strategy down, not from the bottom line up. So it's a different perspective to take. Some questions to ask would be, how much should go to operations? How much should go to programs? How much would go to investing in new technology or innovations, or even how much to fundraising efforts? Then, ask yourself, are new resources needed? Do we need more? Because maybe once you dig deeper into figuring out the resources that you actually need, you may realize that you don't even have enough to put your goals into action, and new resources are needed. Or maybe you have resources, but they don't really benefit your strategy or your desired outcome. So a shift in resources is needed. So this is where you have certain areas that could share services. Where, like, for example, if you have a program or department that is really good at doing a particular task, and you shift some of those burdens to that area, that could actually free up quite a bit of capacity to support those other key parts to support your goals. Or do you have certain programs or activities that could be combined while still serving those separate functions? So for example, I have a client who decided to combine one of its program activities with some of its fundraising activities. So certain facilities and some other resources could be shared all at the same time, and that cut costs almost in half. So consider combining functions. Then, maybe certain resources might need to be eliminated. Maybe you've been doing the same thing year after year, just because, well, that's just the way we've always done it, and change is hard, but you haven't really evaluated whether those processes really add value or are even needed anymore. They may be obsolete. So eliminating those parts will again free up resources to be used to support some of your strategic objectives. And the last thing to consider is if existing resources even add value to the overall mission or strategy. So I'm certain that once you really dig into your goals and what's needed to achieve them, you may be surprised at what you find lurking within your numbers that you didn't really consider before. So basing your budgeting perspective on your strategy, your mission, your financial goals, and your patrons, your clients, you end up budgeting for the value of your organization. You begin considering whether a particular department, a financial statement line item, or even a particular program, whether they actually add value to what you're trying to achieve, and not necessarily how much the total amount will change from last year's results. Now, historical data is important, and it definitely plays a key role in developing forecasts and budgets, but where your budget should begin is from your overall strategy. And then you work your way down from there. So in order to make our strategy-focused budgets successful, we can't lose sight of the fundamentals. So here are some best practices to implement for our budgets. First, standardize data and processes, which means making your methods and processes consistent throughout your organization. This can be done most effectively by taking out manual methods and processes and replacing them with automated tools, because let's face it, manual errors do create inefficient budgeting. So ask yourself also if you're getting the most out of the tools you're currently using, like Excel. If you're an Excel user, have you updated for the newer features? You may find that there are actually quite a bit of newer features out there that you haven't tapped into. Dustin will go over a few of these later in the presentation, so keep a lookout for those. Second, focus on drivers. So for example, for a donation-based organization, some drivers may include, the number of donors, and this could be broken down to new, lapsed, and recurring. From there, you can evaluate what comes in for each category and maybe even compare what comes into the cost to gain or even retain your donors, and see how all this aligns with your strategy and your goals for the year. You could go even further to evaluate how many new donors you gain through solicitation efforts, which could help you find the most effective solicitation methods to reach your goals. You may also want to track specific categories within your patron or your client area. to get a true picture of the costs and how to maybe market to your donors or grant funding agencies based off of that data. Another key driver that I've seen my clients use is the Net Promoter Score. This is a good tool to measure your client satisfaction. And using that, you can find some areas that it helps you identify certain areas like where you're better serving your clients or what areas need improvement. And that can definitely help you when determining where your resources need to go. Next, continuously evaluate past performance. So this is where your historical data comes into play, but especially during this time, maybe we should revisit our 2007 to 2009 performance from the Great Recession, if you were around during that time, and the recoveries after to plan for these next years to come following this pandemic, to see how long it may take to fully recover or what strategies worked during that time. And if you weren't operating, you can still look at peer data and see what trended for some of your peers during that time too. Next, involve all of the leaders within your organization, from program leaders to grant leaders, as well as those driving and operating your fundraising efforts. Include them on setting your budgets and plans, and that will help them be accountable. And it also provides another perspective as it relates to your operations and your strategic objectives, not just one perspective. And also make sure that they have access to reports so that they can continuously monitor how they're doing, where they're at in their budgets. So kind of on the flip side of that, when you're doing your strategic planning, sometimes it's done at a higher level. Accountants or whoever's creating the budgets sometimes aren't involved, but they really should be. They should be involved in those talks so that they understand what's going on when they're preparing their budget, and they can include your strategies and goals there. Next, create smaller budgets per department, program, fundraiser, etc. This is mostly aimed towards those of you that have been doing these organization-wide budgets for some time now. So this is taking it up a notch and creating those smaller budgets that are going to roll up into your bigger budget. Beth will also speak to this in a little bit more detail. Next, update the budget frequently. So really the key here is to use our budgets to be planning on a continuous basis by setting up review cycles, whether that be monthly, quarterly, or some other frequency that works for you, but do it more than once a year. Revisit your initial targets from the beginning and consider using rolling forecasts. This will help you see where you stand from month to month from your original budget and your original assumptions and going forward. If you haven't done a rolling forecast before, it's basically just projecting future results based off of where you're at during the year, your actual results, and then applying your remaining budget to the future periods and seeing where you'll end up. Finally, model out different budgeting scenarios using some of your strategic objectives. And also you could model it out using any unique challenges your organization faces, and even some challenges your goals may create. And then spend some time thinking about those critical scenarios that could actually throw a wrench into your budget or your forecast. So in that case, if those scenarios actually happen, you'll be prepared and you'll know how to allocate costs and other resources. So now I will hand it off to Beth. If you want to give her the slides.
All right, thank you so much, Jackie, for kicking that off. I'm going to dig a little bit deeper in how we actually go about this on a day-to-day basis. Making some of these determinations up front will make your processes and your budget to actual reviews and internal control processes much smoother if you evaluate and understand who's going to be involved and at what level. So the first question you're going to ask is, how is this going to happen in your organization on a day-to-day basis, month-to-month, week-to-week, and annual basis? It's really understanding who the players are in your organization and giving them roles in the situation. We start talking about, as Jackie had mentioned, best practices is to look at maybe doing budgets by administrative, fundraising programs, but it can be a little overwhelming. You know, you start thinking of all these different things. Am I going to have 100 different budgets to do this? So I'm going to start with saying you have to have an entity-wide budget. It's a must to do that. You need to understand and complete your entity-wide budget in order to see your organization as a whole, so that you can see there's that kind of big picture, top level view down to that, or to the organization. So if you're currently not working with a budget, you're just going to want to start with that first. Kind of get your feet wet, understanding how the budgeting process works, how it's going to work for you, and helping making some of those determinations. If you're already doing that, then we're going to start looking at your program, your administrative, and your fundraising. So let's talk a little bit about, you want to evaluate your organization. Do you have different program managers that operate the different programs that you have separately? Or do you have one department head that does all the programs? Is that person different from your administrative accounting individual and from your fundraising? So you're going to have to answer a lot of these questions to determine how far you break down the budget and who is going to answer that. If you're going to have somebody responsible for answering the budget to actual questions of why is this over and under, then they need to have their own separate budget to be able to answer that separately. So it's most likely you're going to have different individuals involved in the program versus the administrative and fundraising. So you want to make sure that you're involving all of those and making those decisions. Once we start kind of looking at that, as most nonprofits have, they have a lot of different funding sources that will maybe support the program administrative and fundraising. So first thing we want to look at is grants. This is a very crucial piece, is that you have a lot of program managers involved in the grant budgeting, because as you all know, when you apply for a grant, they sometimes give you a very specific budget that you're supposed to follow in that application process. The program managers, the individuals applying for those grants, do not want to do that in a silo separate from your accounting department. This has to be something that you're doing together. You want to, as you apply for any new grant, any new funding source, make sure that you're talking between the program individuals and the accounting individuals, that those grant budgets will tie into your accounting system. It can get overly complicated when you're trying to do reporting to those external sources. If you're having to take accounts and separate them out into the budget for the grant reporting, or combine things. So as much as you can do that, you want to evaluate, as you're building in these budgets, how does your accounting system actually work? What revenue and expense accounts are being included in that accounting system, so that it's a very smooth process across the board. But then the second thing you want to evaluate is, do we have multiple grants that are supporting one program, or do you have one grant that's supporting the program by itself? You really want to understand your programs and how that's supported by potentially unsupported funding as well. So if you have 3 or 4 grants that support a program, you already have those budgets, you've applied for them, you've received them. Now let's look at that program as a whole. You don't want to forget that, because there's potentially some unfunded amounts. Where is that funding going to come from? Is that something else that we can ask for? So if you develop a budget as a program as a whole, understanding all those different funding sources, that'll help manage those programs that you have so much more seamlessly as an organization, if you're understanding that as a whole, not just the grant budgets. So most of the time you're going to want to see, you will have that grant budget that you've had to do, but it's going to roll up into an overall programmatic budget. The other thing to look at would be restricted contributions. Do you have to have a separate budget for those restricted contributions? Probably depends a little bit on what those contributions are for. Do they support that specific program that's also supported by grants? Then maybe that's, you've already got that budget going and that's part of that. If they're supporting one in particular program by themselves, then maybe you have a separate budget for that. You want to evaluate whether or not you have multiple contributions supporting one program or one large individual. Such as if you have a capital project that you want to do, you wouldn't create separate budgets for each one of those contributions. You'd have an overall budget for that capital project, kind of with estimates of what those restricted fund contributions would be. So this is why it's important to have so many levels involved, your board, everybody involved in this process, because there's a lot of things to consider as you're walking through this to make sure that you are addressing all of the different areas and making sure that this can actually work with you on a day-to-day budget as a tool to be able to manage these programs as you go throughout the year. Every process that your organization has should have a review and approval step in that, from how you bring in money, how you pay money, anything like that. I don't think your budget is any different. Budget is a tool and it can be used as part of your internal control processes. So in going into that, staff, management, and board of directors all need to know what their responsibility is. And so as you're developing your budget processes, you kind of want to consider, what is that internal control? What's that key control that we have over this budgeting process? This will help, A, determine who should be involved and at what level, how we develop that budget, those best practices that Jackie talked about, and potentially, what kind of budget we're doing, as Jackie talked about with some of those. So that's really important as we go through to understand the controls that you're going to have over your budgets. So as I kind of mentioned, I do think that everybody in the organization should be involved with a budgeting process at some point. Board of directors, management, program directors, accounting department, all of the above. It's a whole entity process because it's a tool that can be used at all levels. So we don't want to leave anybody out in the beginning as we're developing these budgets and then expect them to have some responsibility for it as we're doing budget to actual. So it's really important to make sure that everybody's included. When should your budget be completed annually? I think best practice, obviously, that it should be completed prior to the beginning of the fiscal year. If you're going to use this as a tool and a strategy-based budget that's going to help you with your mission statement, if you don't have that in place prior to starting your fiscal year, you're kind of starting behind and you don't have that kind of forecast forward-looking that's going to help you meet your mission requirements. Which means that you need to be starting this process months before the end of your fiscal year. This is not something you can start in December or in June, depending on what fiscal period you have. This is something that you should be starting 3-4 months out, depending on how many people you have involved and what those approval processes are within that and how much time everybody has, depending on the time of year. You want to have your program managers looking at the budgets and making comments, understanding what grants are coming in and making sure that you've evaluated for those. The accounting department's going to be looking over it. The executive team, the management team is going to be having some oversight. And then finally, most likely approved by the board of directors. Every entity is a little different on how that is going to go. It's going to depend a little bit on your size of your organization, but it's crucial to make sure that everybody has a say as you're building that budget. Now, Jackie talked a little bit about forecasting, but I'm going to talk a little bit deeper about when you change that budget. Forecasting is kind of looking forward, where your actual results are, looking at how that budget is affecting that going forward. And I have a lot of people ask me, well, we budgeted incorrectly. Should we go ahead and change our budget? And I think that in order to have this a really good tool that helps you budget in the future and also keeping you kind of that internal control process going this year, is that your budget should change when you have new programs, funding sources, events. Obviously, last year we probably had a lot of budgets changed due to COVID when that kind of hit. You don't want to change just because there's some of the line items that were incorrectly budgeted. Or, for example, if you have utilities that you originally budgeted for $500 a month and now it's ending at $600 or maybe at $400 because you were just off, maybe things changed. You don't necessarily go back and change your budget to actual for the whole year. That's part of your tool. Was there circumstances that changed that caused that number to be different? Or was it just not understood fully what those costs were going to be? And so having a budget to actual difference is not negative. It's not something that we should never have budget to actual differences. That's just not okay. We need to change our budget. It's a learning experience, and facts could have changed. The budget to actual review part of that and seeing those differences is part of that internal control process. And that can help provide that oversight to see, oh, maybe something got posted in the wrong account. I mean, I've seen that before where budget to actual report will show that there was some missed postings or that there was some misunderstanding about approval processes of getting new type of expenses approved prior to incurring them. So you want to have those in there because that is part of your internal control process. So until you have something that's significant that is going to create a whole new stream for you, that's when you want to start evaluating, is this when we're going to change our budget? We're not going to change it for every little thing. Now let's talk a little bit about who should be reviewing the budget to actual and on what level that should be happening. The first step, of course, is going to be accounting department. As they're closing out the month, that's one of the tools that they're using to kind of do their own internal oversight. Maybe you have an accountant with a CFO that's kind of overseeing that budget to actual. That's happening first. Then it's probably going to go out to the program managers and directors to have an oversight and review and kind of see their own programs. How am I doing? Can I answer some of these questions? Have I done what I was supposed to do? Am I meeting the mission with my budget? And that's a good tool for them for programmatic as well as financial purposes. Then it's going to go to management, and that's going to review, management's going to review all the program budgets, kind of see the notes that they've created, and also the entity as a whole, and see all of those different aspects. This review and their comments should be documented. In my world, I'm always saying if it didn't get documented, it never happened. So that documentation, of course, can happen in a lot of different ways. By emails, a written thing that's scanned in. We are transitioning quite a bit to electronic things, so potentially you're no longer having written and printed and set into files. But there should be some sort of documentation that this review did occur. Part of that review will help and build those budgets in the future too. Finally, we're going to go to the board of directors with the budget. The board of directors is going to potentially review the entity as a whole and maybe program budgets as well. This is really going to be dependent upon the size of your organization. If your organization is very small and your board is involved in those programs, maybe they're seeing those, or maybe they're just seeing the entity as a whole. More than happy to have conversations about that with individual organizations, what best works for the different organizations, but it is very dependent. So board of directors should see something. It's just going to change depending on the different kinds of organizations. And again, that's documented in the minutes to show that that is occurring on a regular basis. And all of these pieces, as all of those reviews happen and all of those notes are taking place, that's going to really be essential in keeping that information so that the next year, as those are being developed, those new budgets, we're using those as a tool. So those are kind of the steps that you want to walk through to make sure that everybody's involved, it's occurring on a timely basis, and you actually can use this as part of your internal control process, which is such a crucial part for nonprofits to do that. Now, this is a lot to do, so there's a lot of work in the background. So Dustin's going to kind of talk through some of our software tips that we have that maybe can help make this a little bit more efficient versus taking so much time, because you don't want to spend budgeting all day long and that's all you do, right? So I'm going to hand it over to Dustin now.
And going to advance here to the next slide, and I'm going to talk about budgeting and Excel here for just a moment. So I think Excel is an adequate tool for simple budgeting, and if you're doing it infrequently, like once a year, I think Excel can do the job. So for those of you who are on Excel and want to continue using Excel, I just want to share some Excel tips in regards to conditional formatting. Conditional formatting is not a new feature in Excel, but it's been greatly enhanced in the latest versions of Excel. So what you see right here under the before column, this is the traditional format of a budget report with columns for actual results, compared to budget amounts, with the variance column right here, computing the difference between those two columns. And what we do is we put an F if the variance is favorable, and a U if the variance is unfavorable. And I think this format certainly works, but in my opinion, it isn't the easiest to follow if you're just looking at it as a glance. It may not be intuitive to the non-accountant people that are looking at this. So what I suggest is putting a little more color in your report, as you can see down here below, which may make it a little easier to read and quickly spot where things have gone over budget. So you can do this with the conditional formatting button, which you can see over here to the right. It's under it's going to be under your home tab, and you'll have that conditional formatting button. And you can find this on the Excel ribbon. This is now the very simplest form of conditional formatting is based on values. So what I've done here in the graphic is when you look here under the word after, what I've done is I've highlighted cells with color scales where the cells are different shades of red or green, depending on how much over budget or how much under budget the amounts are. So that I've accomplished that here with conditional formatting color scales. Now you see over here on the right, you see there's an option here for more rules. So if you click on that drop down, you just have a ton of flexibility there in choosing colors and assigning what values you want them to apply to. And you can even make this a lot more sophisticated by doing conditional formatting based on a formula. So for example, you could highlight cells that contain variances that are a certain percentage, let's say 10%, from the actual amount compared to the budget amount. And you can also create icon sets like a green check mark if it's within the budget, or a red X if it's over budget. There's a bunch of different icons that you can stick into an Excel spreadsheet to call attention to those. So the capabilities of what you can do with colors and graphics in Excel, especially for budgeting reports, I think is pretty extensive, and I think it can really enhance the usability for your non-accountant users. But now for a moment, I just want to talk about some software alternatives to Excel that can be used for budgeting. The problem that I see happening for companies using Excel is that there's just a lot of manual work being done. So the accountant might be manually typing in numbers in Excel, or cutting and pasting numbers from other systems, just because the accounting system isn't connected to Excel. So those steps have to be redone every month. And in some cases, several hours or days might be spent doing all this data entry work. Not to mention, it can be a hassle with version control and distribution of these Excel spreadsheets with the directors and with the board. And so the answer to some of these issues might be budgeting software. So if you're a large nonprofit organization, you might be using an ERP system, and I know there are many of them, too many of them here to list. I'm just listed a couple on here that we use pretty frequently here in Eide, those being NetSuite and Intact. So NetSuite's product is called Planning and Budgeting, and Intact's program is called Budgeting and Planning. So kind of funny, they use the same two words and they just reverse the order of them. But these two are both modules that are accessed right within those two ERPs, and they can create an actual to-budget report for different types of reports, like you can see here in the screenshot down here below. Now, one of the biggest benefits is that you don't have a bunch of files floating around, but rather you have one single source of truth. I'm not mentioning these modules in an attempt to sell them at all. I just wanted to bring them up because I think it's worth looking into. They could save you time and energy, could make your budgeting process easier. Now, if you're using small business accounting software, maybe using QuickBooks or Xero, those both have simple budgeting features built into them. You could get some of those same benefits, but in some cases, it could make sense to use a third-party software that automatically can pull data from your accounting software. And there are several options to do this, several softwares out there that can, but the one I'll share today is Giraffe. and our friends at Giraffe were kind enough to send me these screenshots of what it might look like for a nonprofit. Now, the problem is that many small business accounting software packages they're very limited in reporting and dashboarding aspects, and they're not flexible enough to customize those reports and dashboards. But as you can see here in Giraffe, it can display the data from your accounting system in a dashboard style, including, if you look right here in the middle, it's got the operating expenses, budget versus actual. It's got that graph there, which you can see front and center. It can be front and center for all of your users who might want to go in and look at this information, your directors or your board or whatever. Now, Giraffe can also get workforce data out of the payroll software. For example, Gusto, if you're using Gusto for payroll, it can grab your demographics from your payroll system, or you can also import those from Excel. So you can also do some dashboards on here that contain headcount data, as you can see. One more screenshot of Giraffe I want to share. These two screenshots here are some examples of reports you can get out of Fathom or out of Giraffe. And as you can see here on the left, we have an executive summary, which is in addition to the accounting metrics. We have funding, donor, and employee metrics you can see here. And then here on the right is a budget versus actual report by funding source. And again, you'll notice that this report contains some non-financial data that might be drivers for some of our budgeted dollar amounts. Another feature of Giraffe here is we can do budgets by department, or in the case of a nonprofit, we can do budgets by fund, which is often important if you're a large nonprofit. So another point I'd like to share here is that I've seen a trend during the last couple of years, and that's moving away from employee expense reimbursements towards what we like to call controlled credit card spending. So what the traditional process is that employees spend money from their personal funds and then they get reimbursed. And there's all kinds of problems with that. It's a cumbersome process. Expense reports might not get filed for a few weeks or months. So there's often an information lag. If you're an accountant in an organization, you don't know when the money is actually being spent until the expense report comes through. So, and employees, they might not follow the company policy, they might go over budget, and they don't know that until after the fact. So the solution I've seen many companies adopt is that rather than after the fact employee reimbursements, what they're doing is giving credit cards to employees, company credit cards to employees, and then they're integrating that with software and enforcing those budgets. So the advantages of this is you can request and approve budgets with a phone app, like you can see here on the right. You can request money, somebody can approve that budget so it can be spent, and you can get real-time information out of this. And the second a credit card is used, it all integrates with your accounting software. So you may want to consider something like this if your employee reimbursements are just contributing to that problem of things going over budget. This is a way of enforcing that. And the screenshots you see here on the screen, that's from a software called Divvy. There are other options out there as well. Expensify actually has a new card program. TeamPay is another one I've run into. They also have a very similar software. So just something you may want to consider. And as we go here now to our closing thoughts, one thing that comes to mind, a quote that I've heard often is, if you do the same things, you're going to get the same results. And I think that's a big problem, especially among us accountants, is that we have the acronym called SALLY, the same as last year. We tend to do the same things and we get the same results. So hopefully with some of the things that you heard in today's webinar about budgeting, from the things that Becky and Jackie and Beth both shared with us, and some of the software and Excel tips I showed today, you may have some ideas of some new things you can try that can enhance your reporting and your budgeting. So that's all that I have. I currently don't see any questions here in the chat, but we do have about 10 minutes till we reach the allotment of our time. We have met the CPE requirement. We did hit the 50-minute mark, but we do have 10 minutes that we can spend here answering questions. And we have them popping in, so that's great to see.
All right, so while those are coming in, please go ahead and answer this last polling question, and feel free, guys, to go ahead and answer those questions that are coming in. So the first one here says, what were those? Oops, okay, Dustin got rid of it. No worries, he'll address it in a second.
Yeah, so I did see a couple of questions here. Where would you find those enforced credit cards? The screenshot that I showed is called Divvy, DIVVY. You can Google that and find them. But also Expensify has a card program that's similar. And TeamPay is another one I know of. And I know there's many more than just those three. So, but I do have some friends who are controllers for companies, and they've told me that they've moved away from those employee reimbursements to those card integrated software solutions. And they've told me that their employees like that they like the new processes, and it's easier. The biggest benefit, though, is that it's easier for those controllers to monitor what's being spent, and they're more able to enforce budgets on what people are spending. So,
You guys feel like you can answer any of those others in the next
Yeah,
few minutes?
There was a question regarding the 10%, if that would trigger board weighing in on that. I think that can be very dependent on the size of the organization. And I would absolutely recommend setting that during the budgeting process. So that as you guys develop and approve that at the board level, the board can make that decision. Okay, everything over this percentage we'd like to have presented back towards us. I do think that probably 10% in some organizations may be a little low, depending on the type of expenditure that you're doing. A month-to-month ones that are set, like rent, utilities, that might be a really good limit, because those you should already know. But it might depend a little bit on who your signers of your accounts are. So if you have board members that are signers, they're seeing a lot of those transactions. I might tend to lean towards a little bit higher, maybe a 15% change. I don't know if you guys, Justin and Jackie, if you've seen percentage requirements to go to the board. I've never really seen too many percentages change, but I think that the board weighing in, first of all, they're seeing it on a monthly basis, or every other month at their board meeting. So they should be seeing those budget to actuals. But an actual change in the budget, the board should set up front what they're going to want to see as a percentage change to be approved by them.
All right, well, there's some great questions coming in, so feel free to keep those coming. We do have about 6 minutes. Do you guys feel there's any more that we could possibly address?
So there's a question regarding offering resources for understanding accrual versus actual budget for income, and then it is accrued to previous or future fiscal years, and how do I budget for that? This is going to depend a little bit on how you develop your reporting that's done on an annual basis. If you're having an audit, it's supposed to be on an accrual basis. You probably want to consider budgeting on that accrual basis as well. But you do want to take into consideration the cash flow. So sometimes you can have, and again, this just creates more work, but sometimes you can have a cash flow budget as well as your accrual based budget. So if you keep your books on an accrual basis, then you want to have that budget to actual on the same basis as that. Otherwise, the differences won't make any sense. If you keep your books on a cash basis throughout the end of the year and do just year-end accrual adjustments, then you probably want to work with a cash-based budget. But you do want to understand those differences and be able to explain those to the organization as a whole. A cash flow budget is going to be important in some situations if you do have cash flow issues and you're wanting to make sure you understand when that income is physically going to come in, regardless of when it's recorded in an accrual basis.
All right. Chances we can answer this one. Could you please show us some examples of scenario modeling?
I don't have a Dustin, do you have a demo?
A demo of,
I don't know, and maybe one of our software that we use.
scenario modeling.
I didn't think about sharing
So
that.
I guess maybe that question is more of a forecasting. Yes, like a giraffe that I had showed earlier, you can do scenarios with that one for forecasting. We also use another software called Fathom. So you may want to check out Fathom as well. Those are just two examples of software that I know that can do forecasting in addition to budgeting. LivePlan is another one that I've looked at. So those are, I think, worth taking a look at.
So we've had several questions about, tracking time and recording it across grants or programs and activities. It's hard to answer if we're not quite sure which accounting software you're using. It looks like some people might be doing it in Excel. And I know this is a challenge for most nonprofits, but there is software out there, accounting software that can do it pretty easily. And I think QuickBooks Online, we're learning, can do it as well if you set it up correctly. There's a lot of questions.
Got a lot of great questions
through
today. Yeah, maybe we should have set more time aside for questions than 10 minutes. Typically, we haven't gotten this many questions before. I did get a question here. What budgeting software do you like that integrates with Great Plains? I haven't used Great Plains. I'm not aware of what ones integrate with that, but Great Plains is a desktop software, so you're probably going to be a little more limited on your options than you would be with a cloud software. Let's see. Is there a resource with other Excel tips that would be helpful for automating some of the budgeting? That's a great question as well. I do attend a lot of CPE from K2 Enterprises, and they do have a lot of great courses with Excel tips. But also there's a lot of self-study ones as well. I think you've got Udemy, you've got Lynda, you've got a few websites that have some very good Excel courses with them as well.
There's a question about, I'm answering it right now, but I'll just.
Yeah, I did notice here, Shelley did chime in on that. She says, we use Dynamics Budget that integrates with Great Plains. So there you go. That may be one to take a look at. Excel University is great. Yeah, thanks for that suggestion, Corey. Amber Stanley here has said, QuickBooks Online does have those features. You would have a class list created by funding stream. So thanks for that, Amber. Sorry, Jackie, did you have one you were going to address?
I addressed it. We're out of time, but it did talk about, the question was 2020 was such a crazy year from a historical perspective. Should we just omit 2020? I do think, going forward, I do think 2020 skews a lot of things. So taking that into consideration, yes, going back a couple of years before that, but don't discount the fact that, nonprofits were probably going to still be affected for the next 1 to 2 years. You're not probably going to bounce back to where you were. So keep that in mind as you're preparing your budgets going forward.
All right, everyone. I know there's a ton of questions. Thank you so much for getting those in. What we will do is we will pull a report and we will answer those questions offline, and our presenters will be in touch with you. We just want to thank you so much for attending. Thank you, presenters, for hosting, and we hope everyone has a great day.